Hey you guys, what's going on? Hope you guys are doing well today. This is Virillo Trading on YouTube. I just wanted to wish you guys a great day and a great holiday season. So we are approaching the end of the year and it is a great time to start winding down and basically getting to reviewing certain things and improving our methods for the coming year. So guys, in this video in particular, I didn't really have much planned, but still don't forget to leave a like on the video, subscribe to the YouTube channel if you like this kind of content. In regards to where I'm at right now, I've been spending some time working on my trading and fine-tuning certain things in regards to my methods and my ways of thinking about the markets. In front of me, I've got a chart for the Canadian dollar futures, and I'm well aware that the futures market on Forex is not super liquid, and it certainly doesn't give a great context as to the actual amount of liquidity in the market, because as you know, the Forex market is the multi-trillion-dollar market, and that's why if you look at only one futures contract on Canadian dollars, you're probably not getting the whole picture. I was just looking at it for educational purposes. I'm gonna answer the door right now. All right, wow, would you look at that? So as I was filming this video, doorbell just rang and I got a new book in the mail, and this was a book that was recommended by a trader I follow, and I will recommend it to you now, even though I haven't read it yet, but that is the next read on the list. So The Hour Between Dog and Wolf by John Cotes. All right, great. This would be 30-minute footprints for Canadian dollar futures starting from December 17th. And, you know, looking at the footprint, there is a nuance here that I want to point out to you. So look at this 30-minute rotation here where we saw a strong move up towards the upper part of the range from the previous day. Basically, what we can see on this footprint is a couple of buy imbalances. So one there and another one there, and the bar is closing on its low. So it makes sense to say that if we are biasing below the buy imbalance, that is pretty bearish. That followed through and we saw a rotation lower. However, in the context of the Forex market, I do not think that would be enough information to trade off of. But I will say that if you are trading currency pairs and whatnot, I do think it is important to reference multiple markets. So for example, if you're trading the dollar against the Canadian, you need to look at the dollar futures as well as the Canadian futures on their own independently, as well as the spot FX chart, which would be this USD CAD. That in a way can give you a slightly better picture of the liquidity, but at the end of the day, you still don't see the whole picture. Again, that's why Forex is not really a transparent market. Anyhow, I was just looking at these footprints for reference purposes and just to look at jigsaw footprints because they're coming along quite nicely. In regards to where I'm at for the next few weeks, guys, I do not know where the future of this channel lies, but I would like to express my gratitude to you guys for being awesome viewers and for all of the kind words and gratitude on some of the tutorials that I shared earlier in the year. It really is a great feeling to be able to provide some sort of value to viewers and help people that are seeking certain information. I don't know if I'll be making more tutorials and keep this channel going. I do know that I'm spending more time on my trading and my business plans for the future year. So that being said, so there is a trader that goes by the name of Gary Norden, and I am very much appreciative of his insight. And basically, something that he says is that charting in general, is a good way to mess you up, in the sense that a chart is there to represent information that had already occurred, and it is not relevant to what is happening right now. Now, of course, there could be some scenarios where past information could affect future prices. Like I'll give you the example, if you know that a lot of selling took place at a price and the price was unable to move lower, now we are on an attempt to move higher, there is a high probability that some sellers might try to chase the market higher as it is moving against their initial thought. And it doesn't require you to go back and look at a lot of past price action. So that is where the whole saying where they say past results is not indicative of future results, in a way, that's probably the most true thing I've ever heard in trading. Whatever happened in the past is not relevant to what's happening right now. The edge behind volume at price in real time is that it's directly factual information happening in the current moment. It's essentially the real-time information. So, you know, professional day traders learn how to read the real time. They don't base their decisions on past information. That's why charting is essentially flawed in that sense. I'm not saying charts are horrible. They're definitely useful for some purposes. But when it comes to really trading in the moment, like a market maker, you're not really concerned about past action. You're trying to be concerned with the moment of now. And your goal is to essentially ride the wave, while the majority of retail traders are sitting there trying to execute trades based on candlestick formations and based on past prices that have already occurred. You're sitting there trading the real time. So, the way I see it is, as long as there are candlestick traders out there, the traders that are reading the real time will always have an edge over them. I'm saying that with confidence right now, but I also know that there might be some traders watching this who have never heard that before. So I don't mind if you leave a dislike on the video for that. Just for reference, check out that video from Gary Norden where he says why charts don't matter for scalpers. And if you really want to make yourself a good investment, I'd suggest buying the Gary Norden Scalpers Manual. Without going into too much detail, a lot of what he says is really counterintuitive for the way the majority of retail traders think. And it all comes down to this kind of programming that we're all exposed to from the news media and the TV guys that come out and start talking about, stocks and market movements and this and that. A lot of what he says, like I said, is counterintuitive to that. That's kind of where I'm at, guys. I wish you the best. Last but not least, I do want to give my thanks to Shihab's blog, because this guy actually said, hey man, you should start doing YouTube videos. And if I would not have started doing YouTube videos 11 months ago, my channel would not have 4,500 subscribers and I would not be paying my rent with YouTube ad revenue. Yes, I just said that. So I'm grateful to this guy right here, and you should definitely go check out his videos if you're into options trading. I really enjoyed this video right here where he talked about how to sell cash secured puts in a registered account. I'm very much a fan of a midterm strategy that kind of generates a bit of passive income in an account. It's something I've been exploring lately, which is the idea of selling covered calls. But might be to your surprise, not traditional covered calls. If you look up covered calls on YouTube, you're going to see traders always talking about out of the money covered calls. In reality, there's more of an edge selling in the money covered calls. We don't have to go in detail on that, but leave a comment below if you have experience with that topic. So guys, that's gonna be it for now. I would like to wish you guys a fantastic holiday. Thank you so much for being viewers, and I will see you in the next video. Take care, bye.